Statoil is an oil and gas company. Why would anyone trust you guys to report on climate change, which, frankly, is something you contribute to? Sounds like you're saying it's the consumer's fault. I mean, surely you have some responsibility. Climate change is a clear and present danger. Someone's going to have to take the hit. Why not you? Hello, I'm James Crisp, political editor at Euractiv.com, and welcome to Under Pressure, a no-holds-barred discussion with a guest. And our guest today is Erik Varnæs, Chief Economist of Statoil. Thank you so much for coming, Erik.
Thanks for being invited.
Now, I mean, you're here for a reason, of course, and the reason is you've published your latest Energy Perspectives report. Now, we're going to get into the report, but I guess the obvious question is, why do this? Why write a report?
Well, we have to take a look at the energy markets internally, and as being part of a big company, we want to participate in the debate. It's part of our social responsibility to actively engage with the public in Scandinavia and elsewhere, and possibly contribute to a fact-based debate about very important matters.
But I mean, Statoil is an oil and gas company. I mean, why would anyone trust you guys to report on climate change, which, frankly, is something you contribute to?
Well, you contribute to it because you are the one that uses the oil. Wow. And we contribute to it because we're an energy company. We provide oil and gas. We are investing in renewable energy. And we think it's important to have a fact-based discussion on where the world is going, how quickly we can change the energy system, the energy mix, and what it takes to get to a world where everybody's more happy about energy and climate than we are at the moment. But
it sounds to me that you're not taking any sort of responsibility for the impact on climate change. It sounds like you're saying it's the consumer's fault, it's society's fault. I mean, surely you have some responsibility.
Yeah, definitely. And we are actively working to reduce the emissions in our own production to get the oil and gas to the market. And we are having emissions that are much, much lower than the global average. We're investing in new renewable energy. We're advocating for changing the carbon pricing system to put a proper price on carbon. And we are doing whatever we can to be as efficient as possible, which is also part of the equation.
Well, that's something we'll come back to later in the interview. I mean, the first thing is this report. How independent is it?
It's truly independent, except that an oil and gas company pays the salary of the people who make it.
So who are these people?
Analysts, economists, petrochemical engineers within Statoil. Not a single word in this report has been approved by the executive committee or the board of directors.
But there's a long and somewhat sort of shabby history in Brussels of big organizations such as, say, tobacco companies, energy companies, agricultural companies, basically buying research. You know, the thing is, if you're paying for it, there's an impact on that, isn't there?
Yeah, there's a lot of people that are financing climate research as well, but we still tend to trust the climate researchers, right?
Well, there's a lot of people who trust bad climate research, and a lot of climate research which has actually been indirectly funded by fossil fuel companies. Say in America, for example, there are some very dubious think tanks there.
Yeah, and there's a lot of climate research that will probably be funded by renewable electricity companies as well. So the point about this is that we need a lot of research. We need a lot of viewpoints about something that is really uncertain, that is really long-term. Nobody knows where the world is ending up. I think we can agree on the fact that if the economy is to grow globally, then there's an underlying demand for more goods, more services, more activities that require energy. And how we can get that delivered with as little CO2 emissions as possible, with as little waste of energy as possible, is a common challenge. And then it's up to everybody then to think through what that takes.
But I guess the point, and this is the final thing about the report itself, is people will look at this and they'll say, well, you know, this isn't a contribution to a fact-based debate. This is a lobbying exercise. It's a PR exercise.
Well, it's a piece of analytical work. We have 3 different scenarios, so it's a bit difficult to see which one we're lobbying for.
Could you summarize what the report says on oil demand?
Yeah, it says that oil demand can go in very different directions over the next 33 years. We have 2050 as the end of the period, if you like, for the analysis. And depending on what happens from now to 2050, oil demand can either go down by 30% compared to what it is today, or it can go up by 30% compared to what it is today. So that taking it all the way to 2050 ensures that we have a really wide outcome space. It's not really a good forecast because the variation is so wide, right? But what it serves to show the importance of your assumptions on electric vehicles, on energy efficiency, on carbon pricing in determining that outcome.
So is oil demand going to drop or not? I mean, there are people out there who care about climate change but aren't going to sit down and read this report. We need to sort of have a clear answer. I mean, it seems to me, I think you have here oil demand in 2050 ranges from below 65 to above 120 million barrels per day. Okay? Regardless of scenario, and in addition to massive investments in renewable energy, we will continue to need large investments in oil and gas due to natural decline in supply from existing fields. I mean, that sounds very convenient for Statoil.
Well, but it's a matter of fact that we need more investments to satisfy demand, even if demand were to peak. If you believe in a world where we actively, radically change global energy and climate policies compared to what it is today, and you believe in a world where technological development speeds up rapidly compared to what we see today, then oil demand will peak, and it could peak relatively quickly, but that depends on the politicians actually starting to do something.
But that's what's needed, isn't it? I mean,
and it's what's needed if we want to go to the 2-degree scenario, 2-degree target, or I mean even below, we have to do it even faster.
Right. And do you think that's actually going to happen?
I don't think it's very likely, but it's possible. It's realistic in the sense that it's actually possible, but it's not realistic in the sense that it's probable. So, but even if demand were to peak relatively quickly and then start falling, production from existing fields, both oil and gas, would fall much faster if we stopped investing now. And that's why we need a lot of investment. We need a lot of investment for production to keep up with demand.
But this is more money for polluting fossil fuels at a point when, I mean, you take 2050. The EU has a target to decarbonize by 80% in 2050.
Yeah, and they do in our scenario, 81% in the EU. But there's still oil and gas demand left in the EU.
But I mean, in Germany, we have the Energiewende. Denmark's a world leader in renewables. A few weeks ago, Britain was powered entirely on renewables for a day. I mean, is all of this meaningless? Does it make no difference whatsoever?
No, it makes a whole lot of difference. But that doesn't mean that oil and gas demand goes to zero. But there's a difference between CO2 emissions at 38 billion tons, keep continuing, which would be the case if the current policies continue, and CO2 emissions falling to 13 billion tons by 2050, which is what it has to do if we're to be aligned with the 2-degree target. Frankly speaking, what happens in Denmark is not very important. It's the increasing energy demand in emerging economies where the economy grows. India's economy will possibly be 8 times as large in 2050 as it is today.
But India
that requires a lot of energy.
But I mean, well, there's two things about that. One, India has signed up to the Paris Agreement,
which is not tight enough to deliver this.
So you think the Paris Agreement just isn't worth the paper it's written on?
It is, but the national promises within the Paris Agreement are not very far from being tight enough to deliver the 2-degree target. More is required, much more. The ambition in the Paris Agreement, 2-degree or well below, is much tougher than what the individual countries have actually promised to do. So much more is needed than what and by the way, what the countries have promised to do, we're very far away from delivering that, both in Europe and in India and in China.
But no one forces Statoil to meet the demand. I mean, if you were really serious about climate change, you could say, well, we're going to do similar to what E.ON has done. We're going to go straight into renewables. If you want oil and gas, dig for it yourself.
Yeah, we could do that. Do you think every oil company would do that? Do you think everybody else would do that? And what do you think would happen if all the refineries in the world shut down tomorrow?
Well, you tell me. You're the expert.
Well, that would mean that all the economies of the world would basically collapse. It would mean you wouldn't have oil and gas to make your toothbrush when you have to replace it. You wouldn't have oil and gas to make cosmetics. You wouldn't have oil and gas to make the carpet we're sitting on here. It would mean a total collapse of global economy relatively fast. So it won't happen. As long as we demand oil and gas, there will be not a requirement, but there will be an interest in somebody providing it. If we don't provide it, Statoil or somebody else might provide it. The price will shoot up rapidly, and it will be very interesting for a national oil company of any country to actually provide that oil and gas.
But I mean, if the planet is destroyed, then the economies are irrelevant anyway. I mean, people are going to die.
But the planet will be destroyed much sooner if we do that. So that's why we cannot do that. It's not a sustainable proposition to just stop investing in something that everybody demands at the moment.
Do you think the planet is addicted to oil and gas?
To some extent we are. even to coal.
To coal as well.
But what we are addicted, what we really are addicted to is not the fuel itself, but it's the goods and the services and the activities that require energy. Your cell phone requires energy. It's fueled by coal-fired electricity in Poland, at the margin. So you're addicted, in that sense, you're addicted to coal.
And do you think people are actually paying the real price of what their products cost?
No, and that's the big problem. If we want to get rid of carbon in the atmosphere, that's what we have to price. And it's probably it costs us more than the €5 per ton level of the ETS. So the politicians will have to stop talking only about targets, but putting measures in place that make us reflect, that we see the price of what we're doing. Whether it's from a farmer in Norway or a coal-fired power plant in China, the impact on the climate is exactly the same. And that's why we need some kind of global policy to price carbon.
I mean, it just sort of reminds me almost of a sort of a junkie, really, who has to keep taking his fix, even though it's going to ultimately kill him.
Yeah, in a sense. But it's not about killing. But it's about fantastically much higher costs of running society, and that's what we want to avoid.
It's quite a bleak picture that you're painting.
Yeah, but there's hope. There's an optimism. The Paris Agreement is really good in terms of realizing that there has to be some burden sharing here. We're all in the same boat, if you like, and the rich among us will have to finance some of the things that have to happen elsewhere.
Well, the poorer countries aren't quite in the same boat. I mean, they're going to be harder hit than the richer countries.
Some of them, not all of them. And everybody along a coastline might be. Those that lack food today might lack food even more in the future. So that's why it's probably important that we in the rich countries start seriously discussing how can we, with our money, make the most in terms of getting CO2 emissions down. And that's not always to reduce emissions at home. If we have very inefficient CO2 reduction measures in Europe, we should probably spend the money elsewhere instead, to where you get more bang for the buck, if you like. Okay.
Let's talk a little bit about transport, because you mentioned cars a couple of times. I mean, oil and gas, I think it's over 90% of the EU's transport sector. Yeah. So electric cars, flash in the pan? When can we actually sort of see that working?
Well, it depends. If we get a continued development of technology like we see now, we get a serious carbon policy around the world. We keep very tight emission restrictions on the car producers, so that in order to deliver on that in terms of their whole fleet, they probably have to deliver a very large number of electric vehicles, be it plug-in hybrids or batteries or hydrogen at some point. So when the production lines have changed, if the cost development goes on, if we get charging stations, et cetera, then the electric vehicles could be competitive with a combustion engine in 10 years' time.
In 10 years?
And then it could rapidly change.
But if the oil demand, say the electric cars do sort of take off, then the oil demand will drop, then you're going to have a big hole in your balance book, because you're not going to be selling as much oil.
As a whole, no. But so the whole industry will sell less oil. Yeah. But there's still a lot of investments that have to be done because the existing production falls much faster.
But I mean, your profits will go down.
Not if we're competitive. Not if we run break even. If all our projects are break even at $40. I mean, that's the way the industry is moving now.
I mean, but to a lay person, if you are selling less of your chief product, then surely you're getting less money in. I mean, doesn't it sort of pose a threat to your business model?
No. The threat to the business model is that we don't know what happens in the market when demand starts to fall. The robust response to that is to make sure that our costs don't go through the roof. One of the challenges of continuing to produce 100 million barrels forever, or even 120 if we go to the extreme scenario we have, one of the challenges is that it's going to be much more costly to get that last barrel out of the ground. It's going to be very costly oil, very difficult to find, very difficult to extract, extremely deep reservoirs, et cetera, et cetera. So also cost-wise, so we do not necessarily increase profits if we produce 100 forever compared to producing 60 or 80.
So on this sort of cost-benefit scenario, what's the point where you or any other oil company go, oh, well, that's oil done. You know, it's just too expensive. Let's look for the next thing.
Well, that depends on how much oil we are able to extract, how much we can find, what it costs to get it out. At some point, we might end up only depending on oil sands in Canada and extra heavy oil in Venezuela, and some difficult
They're like
oils.
two of the most polluting kinds.
It's two of the most CO2 inefficient kinds. They're difficult to refine because they're very heavy and sour, etc. So there's a lot of costs associated with them, right? And then but then it's up to how much does the consumer or the one who needs the oil, how much is he or she willing to pay? Is there an alternative? You can't produce a toothbrush from electricity.
Let's talk about renewables. I mean, you know, as you've sort of made the point that renewables can't cover everything. They can't replace all the oil and gas demand. I mean, China has gone big on renewables. I mean, they've got lots of money, planned economy. I mean, you're going to bet against their massive investment. What if they come up with some incredible new technology and revolutionize everything?
I think, well, I mean, one of the black swans in any kind of forecasting like this is that if we get a real change in technology, a real breakthrough, but it has to be really big. It has to be something like cold fusion.
Yeah, but you guys would like there to be a sort of an innovation which suddenly makes drilling for oil clean.
What we would like to see is, of course, much more carbon capture and storage, which then alleviates and takes away the CO2.
People have been talking about CCS for years.
Yes.
Nothing's ever happened.
No, and you know why?
Too expensive.
No, the price on carbon is too low. Back to the politicians in Europe, I mean, and the rest of the world.
But I mean,
of course, we also have to bet on that. No,
right?
it's not only. Of course, it isn't. But
I mean, you guys have got the money. You guys have got the money from sort of decades and decades of doing this. I mean, surely it's up to you to put the money into carbon capture and storage. It's in your interest.
But we don't have the mandate to lose money over time.
Well, who gives you the mandate? Shareholders.
Shareholders.
And I mean, how do the shareholders feel about these scenarios, this idea of dropping oil demand and the future?
Some of the shareholders are probably worried about that. Other shareholders see that being cost competitive, carbon efficient, investing increasing amounts in new renewable energy, if we're competitive, if we can make it profitable, is probably a good proposition compared to the alternative. But of course, there's always a fight for the last shareholder. And that's the competition between companies as well.
But the background to this fight, and I mean, I think that this is something which people outside of the policy discussion find hard to understand, is you can have these conversations with your shareholders, but we are told that climate change is a clear and present danger to the future of the planet.
Yeah.
So someone's going to have to take the hit.
Yeah.
Why not you?
Well, we will take the hit. But before that, we probably stop producing. And then the consumers will take the hit if we don't have an alternative. And the consumers are not here. The consumers are in India and in China. They're very poor, and there are many more of them. Africa will have twice as many people in 2050 as today. They are the ones that will take the hit unless we have clean alternatives, sufficient capital going into those. Who's going to invest in all the new electricity in Africa, whether it's distributed solar, wind, gas-fired, or even new hydro? Who's going to do that? Who's going to bring those money in, that investments in, to allow people to have the same kind of development as we are? So I mean, climate change is really serious, but it's not the only clear and present danger.
Well, why don't you do it? Why don't you make these investments in Africa?
We do partly, and we will do that. When we're looking at the new places to go, potential gas-fired power plants, new sources for offshore wind, of course, also the emerging economies are on that list.
I mean, but are they seen as riskier than the developed economy? I mean, what's the sort of the due diligence? I mean, why isn't, you know, this is probably a huge cliche, but you could say, well, Africa in general has a lot of sun. Why not invest heavily in solar?
No, why not? Well, first of all, you need consumers that are rich enough to be able to pay for it for you as a private investor. Or we need funding from somebody who
public funding,
like a government, like a rich government in Northern Europe. I mean, we are paying for stopping deforestation. We could probably do much more about that as a whole on the global arena. If somebody else came along and paid for that, that's really cheap CO2 emission reduction measures, much cheaper than the things that we're doing in Northern Europe. And this is part of the burden sharing that I'm talking about, is that if we are going to go in that direction, in the right direction, achieve the 2-degree target, we probably have to start talking seriously about how do we share the burdens.
Does not investing in renewables cost you a competitive advantage in the future?
We think in a future where carbon has a price, in a future where the world is moving towards a much lower emission society, whatever that might be. Then being carbon efficient is a cost competitiveness. It's something that you want to do to be competitive. New energy solutions, that being low carbon or no carbon solution. It could be decarbonized gas, but it's also, I mean, offshore wind and solar panels is going to be part of the mix. But it requires that the market gives those signals to the private investors, and in order to do that, you need a combination both of technology development that has to be subsidized for a while. We need policy measures, not only policy targets. We need policy measures that actually shows the consumers and the investors and us as companies that that's the way to go. We need the car producers to take seriously what's going to happen, and they have to develop technology, not only on electric vehicles, but also on combustion engines becoming much more efficient, because we still need some combustion engines.
Sounds to me like this is a big job for the regulators.
It's huge.
Your report says that the company has a strategic ambition to allocate 15 to 20% of its annual investments towards new energy solutions in 2030.
Yeah, okay. It's not our report that says that, but Statoil Strategy says that.
So the
report is not Statoil Strategy. It's an independent piece of analytical work.
Okay. So how much money is that? 15 to 20% of annual investment?
Well, it depends how much we invest in everything else.
Yeah, but give us a ball.
But it's big.
Like?
Well, it could be...
so what would it have been last year?
If that had been last year, it would have been somewhere between $3 and $5 billion.
3 or 5 billion, okay. But I mean, and what's the strategic ambition exactly? I mean, that's not sort of binding, is it?
No, because it has to be profitable, and so does everything else. So, and of course, there's huge uncertainties in all these investment decisions, right? But it's a strategic ambition. The ambition is also we have a climate roadmap put in place where we have an ambition to reduce our CO2 emissions per barrel that we produce by 20%, and we are already, you know, not far above the 50% mark of the global average. So our CO2 emissions in production is much, much lower than the global average. And by 2030, we're going to take that down 20%.
I mean, this isn't necessarily a criticism, but your first responsibility is to your shareholders and to profit rather than the climate.
And we do this because we think it's profitable. Otherwise, we couldn't do it. We think it's a competitive edge. We think it's a robust strategy in a world where there's a lot of uncertainty. We don't know the price of oil.
Why not more? Why not more than 20%?
Well, because one of the difficulties is to find enough projects to do this. There's not that big a queue of potential projects lining up. We also need to spend a lot of, as I said, we need to spend a lot of money just to keep production, keeping track with them.
Keep the fix coming.
Well, yeah, in a sense, but also wait for the market to react. It is a sad fact, in a sense, that oil demand continues to grow by 1 to 1.5 million barrels per day per year. We had record gasoline sales in the United States last year.
Is that why, you know, Statoil, for example, would drill in the Arctic, would drill in areas such as the Australian Bight, and, you know, go into tar sands in Canada?
Well, we just went out of tar sands in Canada.
Oh, you just went out of tar sands.
So
okay, but the
that's
Arctic
probably not very likely that we do.
Why did you go out of tar sands in Canada, and how long were you in there for?
Pure commercial decision. We were in there for 10 years, something like that. Had a very small production towards the end. It was difficult to develop new projects there. Those that bought these assets probably have a better proposition to do it. Nothing happens to global CO2 emissions as long as they continue to do what we would have done.
Yeah.
But we went out. It's difficult to make it profitable.
We're not energy efficient enough, are we?
No, not at all. If you look at the globe, no.
Yeah. Okay. Well, let's look at the globe. I mean, what needs to change? What's the sort of the scale of improvement needed to hit the 2 degrees?
To hit the 2-degree target, the world has to improve its energy intensity, which is the flip coin of energy efficiency. So we have to use less and less energy, and we have to improve the rate of improvement 3 times on average from now to 2050 compared to what we have been doing the last 25 years. The world has become more energy efficient the last 25 years. We use less energy per unit of income, per unit of GDP, but only by 0.9% per year.
But the technology exists, doesn't it? I mean, there's plenty of technology to increase energy efficiency. It's just not being picked up.
No, but there is, yes, there is technology. In some sense, the price of energy is too low. It's because this is not only about technology. This is about the incentives. What do you do when you buy a new refrigerator? You buy one that is significantly much more efficient than the previous one, right? But then you change your behavior a bit, because energy then becomes cheaper. cheaper to run that. So you buy a slightly bigger one. Globally, is that becoming more energy efficient requires a lot of capital. It requires grids, it requires infrastructure that is efficient, it requires roads that allow us to utilize them efficiently.
But these are precisely the sort of long-term investments that institutional investors welcome. I mean, it's a low risk, good steady rate of return. Yes. So what's the problem?
Well, part of the problem is that you don't always trust the owner of this, where you buy it from, whether it's an airport or a harbor or an infrastructure, to ensure that steady rate of return. There's a lot of political risk out there. There's a lot of technical risk as well that you have to handle, and everything.
I mean, is that the case in Europe as well? I mean, is there that sort of political risk?
Changing framework conditions takes place here as well.
Brexit?
So Brexit is one story. That's a political risk. and somebody who now had made a bet on the United States sticking to the Paris Agreement, you know, that's a risk. What the impact is a bit different. Somebody who made an investment in Russia 2 weeks before Putin went into Ukraine suddenly have a sanction risk or reality of sanctions for 3 years. So there's, I mean, that type of political risk changing circumstances is part of the business.
That's investment. Yeah, that's part of the game.
Yeah,
so,
exactly.
Your report looks at these 3 assumptions for the future, the 3 possible pathways the world can go down up to 2050. So we've got reform, renewal, and rivalry. So please briefly summarize reform and renewal, and then we'll talk about rivalry.
Yeah, I'll start with renewal. Renewal is the one we hope for. That's the scenario where you go to the 2-degree target. It's a scenario where global politicians agree that addressing the energy and climate challenge is our most important task, and we do it together. We're all in the same boat. We address it. Pricing, carbon, energy efficient measures. We have technology tagging along. Us as businesses will then have an incentive to contribute, and we get a rapid change. We think that in order for that to happen, it has to take place in a relatively benign political climate. The markets have to be open. We can't have sanctions, et cetera, with anybody, because technology development then will be.
So we wouldn't be able to have sanctions in terms of climate, or just in terms of political sanctions?
In terms of political sanctions, the ban on exchange of technology, for instance. If we come up with a good idea, we better be able to sell that to China, India, and Russia. But then we can't have economic sanctions.
Aren't China just going to steal the idea like they did with?
Well, in some sense, let's hope they do, because that's where the problem is, right? But we have to let's at least get some revenues for it. So that's a benign world. Reform is also relatively benign. That takes as a starting point the Paris Agreement's pledges, the individual countries' promises, but then gradually become less policy-driven and more market and technology-driven, and the development is slower than in the renewable case.
Okay, just on reform and renewable, I mean, this gradual change, I mean, I'm guessing, and correct me if I'm wrong, but this would be your preferred option, or Statoil's preferred option. It's a sort of a slow and steady transition. I mean, that would suit your company.
Yeah, and it would suit all markets. Markets tend to react up and down and negatively with spikes of prices, with uncertainty, with risk premiums going through the roof if things change very rapidly.
But we need a sort of a revolution, don't we? We need a disruptive revolution.
Well, if we need a disruptive revolution, that might be caused by the third scenario, and at some point that changes. But a disruptive revolution tends to have much more costs associated when we have no money to throw away here.
Yeah, just ask taxi drivers and Uber, yeah.
Yeah, exactly. That's an example. So, or somebody who just built a coal-fired power or a gas-fired power plant in Germany, and then they started subsidizing renewables. Look at the utility sector.
No one should be building a coal power plant in Germany. We've had the Paris Agreement. Clear signal that so it was presented as a clear signal that this is the beginning of the end.
Yeah, it is the beginning of the end. But when you at the same time subsidize a lot of renewables and you have decided to phase out nuclear, something has to produce the energy.
But subsidizing renewables, I mean, that's fair enough. Yeah, I mean, the fossil fuel industries have had loads of subsidies for years.
Unfortunately, and fossil fuel subsidies are much too large still. Yeah. Not so much here, where we tax it, but in many other countries.
Do you think politicians are taking energy and climate policy seriously enough?
No. They're taking discussions on targets seriously enough, but they're not serious enough when they actually go to the voters with proposed measures.
I mean, does that sort of surprise you? I mean, because it does seem like such a big thing. I mean, people always say, this is about saving the planet. They say it again and again. Doesn't seem like politicians believe it or the public believes it.
No, I think it's no. It doesn't surprise me. What it does is, in a sense, it disappoints me a bit. But it also proves how difficult it is for anybody to put costs on existing voters, which this is, right? Yeah. To the benefits of somebody who doesn't vote, who has not been born yet. Maybe
we've just got to be honest and say to ourselves, look, we're not going to hit the target, or we are going to hit the target. Either way, people are going to die, but consumers want their toothbrushes and razors, so we're willing to pay the price of that in people's lives.
Yeah, well, the toothbrush doesn't emit CO2, so because you don't burn the plastic when you make it. So as long as we can get the electricity or the heat be carbon-free, then we can keep having our toothbrushes, and the oil and gas use is fine, except that it gives local pollution. No, but I think also that we can't give up. I mean, also it's difficult, or what is dangerous here is that the best becomes the enemy of the good. And we should do as much as possible. It's much better to get that CO2 emissions that are consistent with the 2.5-degree target at reasonable cost than to give up now and then we end up at something that is consistent with a 3.5-degree.
But we have to accept that basically that people's quality of life or their lives will be sacrificed because we're not doing enough.
Yeah, or they have to pay some costs out there. And remember that the per capita income in 2050 is much higher than today. So people will be, on average, be much richer. And in one sense, also have the ability to pay more.
Just be a lot less to spend it on.
Yeah, and hopefully they won't travel as much by car as we do. But it's so at least we shouldn't. I mean, the immensity of the challenge should not be underestimated. And since it is so difficult, we should also make sure that the measures we put in place are as efficient as possible, so we get the best results for at least the least amount of money as possible. And there we have a really long way to go.
Let's talk about the rivalry.
Yeah.
And let's talk about Donald Trump. So, he's pulled out of the Paris Agreement. I mean, does that mean, do you guys sort of see an opportunity to take advantage of carbon leakage? I mean, is it, you could do a lot of carbon-intensive industry in the US. You're not going to have to be restricted in the same way as you would be in Europe or China, or maybe even India. I mean, this is a business opportunity, isn't it?
Some might perceive it as that. First of all, of course, it's a big disappointment.
Is it a big disappointment for the oil and gas companies, all of them?
Of that, I'm not sure, but for those of us who have argued for global climate policies that work, of course, it's a disappointment. I think on the opportunity side, in a sense, one of the paradoxes is that one of the countries in the world where we've had the best development in CO2 emissions over the last decade is the United States. And it's happened in spite of lack of policy. It's happened because of markets. So the market, that market will deliver in terms of CO2 emissions is probably relatively decoupled from any action in the White House.
You've been saying that that Statoil needs policy incentives and policy drivers, but we have green entrepreneurs in the US who haven't had those policy drivers and have delivered. Yeah. So why can't you deliver?
Because in the United States, one of the main reasons was that they got access to a very cheap source of gas, which we participate in, by the way, as a business opportunity, and you took out coal. Then you have local regulations in the United States that are also much more important, relatively speaking, to the federal government than in many other countries. So one hope here is, and what has actually happened is that many of the states in the US will stand by the Paris Agreement. They have had local emission regulations that basically ban coal-fired power plants for long. So what happens? So it might not change the U.S. policy. It probably will not have a very long-term impact on the U.S. emissions. What worries is first of all, it's going to delay the process, and it's going too slowly already. So it will
gives other countries an excuse as well.
It gives some countries an excuse, but it could also give some countries an opportunity to step in, and especially if you combine that with the perception that the United States is stepping away from its global leadership role in many dimensions, then taking on this as an opportunity to come out as a global leader and commit to the Paris Agreement.
This is what the EU and China
could
did.
Do that.
Yeah.
So you could have a bit of reactions going both ways. Russia could wait a bit longer. Another country.
Is the US a pariah because of this?
No.
No?
No.
It make no difference to the way people view it, or?
We don't treat,
decisions?
at the global political level, I hope we don't treat at least not the biggest countries as pariahs, because then we're...
North Korea signed up to the Paris Agreement.
Yeah.
The US has pulled out. North Korea are the good guys.
Yeah. Well, yeah, in this sense, maybe, but not in many other senses, at least
No, that's
politically.
true.
So, no, I think what it serves to show is an element of what we have in the rivalry scenario, like some of the other things that we've just talked about, is that it's not a given that the sort of global agreement on energy and climate policy is the most important item on every politician's agenda. There are other issues out there.
Well, some politicians
conflicts.
don't even believe in it.
No, and some people might not even believe in the climate science, but there are other issues there. We are in conflict in several dimensions. We don't like to lose out to our competitors, so we protect our industries. If we do that, it's going to make a difference.
I mean, is there a risk, I mean, there's US regulations which are stopping this from happening at the moment, but is there a risk that the EU could be flooded with US fracked gas in the future?
There is a risk that US LNG exports is going to come up. That is to the benefit of the EU. Mm-hmm. The EU needs a lot of gas. The EU's import needs will probably increase, given that the EU's own production is falling, depending on the EU's energy policies.
It already imports more than half of its energy.
And it imports more than half of its gas. For any consumer, it's a benefit to have several sources of potential supply. The most important sources for Europe is gas supply is Russia and Norway. Then you have LNG as a third alternative. We have gas from North Africa coming in.
This is just locking in more fossil fuels, though, isn't it? It's locking it in and slowing the progress.
It might not be much cheaper, but it's good to have alternatives.
What about the EU and China? I mean, they announced this alliance very shortly after Trump pulled the US out of the Paris Agreement. I mean, that you mentioned a rivalry. Yes, we've had an alliance, but there's a rivalry between the EU and China as well, isn't there?
Well, yeah, along many dimensions.
But I mean, in terms of energy and renewable technology and all the rest of it, I mean, this is a race the EU is going to lose. They've got the money, they've got a planned economy. It's not a fair race. I mean,
first of all, if you look at where the problem is the biggest and where we all have to solve it, is we have to make sure that China's CO2 emissions go down by 60% to 2050. They're 4 times what they were in 1990.
But they can just say, make it happen, otherwise we'll arrest you.
And if they do, we should all be happy. If, as a consequence of that, they find out how to produce renewable electricity the cheapest, they provide that technology, we can buy it from them.
But then they'll be the world leader in renewables.
Well, why not?
Because Jean-Claude Juncker said he wants to make the EU the world number one in renewables.
I mean, the average IQ is the same in China as in Europe, presumably. That means that if you have 400 million people being very smart in EU, you have 1.3 billion very smart people in China. On average, they're going to have more than 3 times as many good ideas as we are.
Yeah, especially because those ideas are delivered at the end of a point of a gun.
Well, yeah, but that's about a political system that probably also will change gradually until 2050. The Chinese system looks very different now than what it did in 1980.
Okay. Erik Barnes, thank you so much for your time.
Thank you very much. Thanks for questions.